OTE, deep retracement to scare off traders who are in the right side of the market. OTE is a market manipulation that the market makers do to scare off traders who are right and make them second guess their bias, their trade idea, or their trade that they're currently in. They'll either make them back off of that trade, make them second guess, then look for shorts, or keep them scared from the setup, right? And yes, sorry for that. Yes, this is a thing in the market, as well as we're gonna be talking about how does a OT happen, when should you expect it, and we're gonna be talking about the intricacies of it, where how it scares off traders, how it makes a false breakout structure to the upside or downside. Right, everything I'm saying, I'm saying it with a vice versa as well. And how does this accumulate dumb money traders and basically messes up their whole bias, right? Let's get right into this. So how does a LTE get created? Market first makes a low and a high, and everything I'm saying is vice versa, okay? The market goes lower, making a lower low, makes a higher high. Above this high, breaks structure, so a MSS. Then market will try to make a stable high or stable low, right? In this case, market already made a stable low here, right? By breaking structure up, right? So the order flow is bullish, right? Because I mean, beforehand, before even this, the market shift should already be bullish, right? But for the dumb money traders, people will come back down. Let's just say people think, this as well could be a retracement out over here. Market could just make a high, retrace all the way down to the 62% mark and to the 0.79% mark and go up high from here, or it could go down, make another high, making a stable high, right? So it's a high who actually holds it without getting souped. So market comes down, goes up higher, making a stable high here, which you can see, which what it's leading up to, right? Eventually, a dumb money trader would see this as a breakout, right? So market broke structure up once again. Market broke structure up once again, one more time. They think, okay, let's buy. It's a really good opportunity to buy. Then market, this is where the OTE happens. Market will do huge retracement. It will make traders that are right second guess, or get out of the trade, or break even, or try to stop loss too high or too low. Eventually the market taking them out, eventually going their way, going their favor. And you can see you start from this high, that stable high, to the stable low, right? So this is low is because it's low pressured out, and market made a stable high, stable low. It's 50% negative, 50% to the 50% mark is not your OTE. Your OTE starts from the 0.62% mark to 0.79% mark. That right there is your actual OTE. So the 0.50% mark is not your OTE. Your OTE is the 0.62% mark to 0.79% mark. And sometimes you could go 0.886 mark, right? But this is the highest one, the highest probability, which is out of ICTs, right? So market will come down, tap the 50% mark. People will think, well, let's just push it up. It goes up a little bit, it comes right back down, right? Now people are like, oh, that this market does not want to go up anymore, right? So they will second guess, they will mess up their whole trade, right? Eventually, market will go to that 0.75% mark or 0.79% mark and higher from here. It just does the second leg up to the upside. So market goes up, comes back, trades down, because market can't just go up, right? So market just does a push up to the upside, starting the second leg. Keep the note, if you want to note that down. That's a very important thing right there, right? Market will go up, retrace a little bit up, go higher, go higher, go higher, right? Meaning it's drawing liquidity. And what does a OTE do? OTE basically does a huge retracement to gather liquidity and to purge out liquidity, right? So market comes back down, purging out liquidities and gathering liquidity, right? To push up to their next, to the drawn liquidity, right? And what else does a OTE does? A OTE basically does a startup for the second leg. So This was the first leg to the upside. OTE was start of the second leg to the upside, right? So market going back down to a huge retracement, to a huge discounted area, or to a huge premium area that eventually make a move to the downside and to the upside, right? Vice versa, right? In this case, a bullish. So market will come back down very cheap from here. This right over here is your best spot to buy, right? So this from this position right over here is your spot best, best spot to buy. Why is right over here is a really good spot to buy? Because it's a huge discounted area, right? 0.62% mark, 0.75, 0.70, 0.7005% mark, and 0.79 mark are very cheap area, right? And this could be vice versa. So it could be a premium, really huge premium area to sell and buy, right? So this right over here would be your second leg to the entry. If you want to take another entry, let's just say you got stopped out, you did not know about it, this would be your second time to enter the trade to the upside, right? But I highly suggest you guys don't do it. Just stick to, your Model 1. Don't stick to, don't do this, because this will, this don't happen every time, by the way, because this only happen if the market doesn't have enough liquidity. So if the market doesn't have enough liquidity, market will eventually lead to retrace, right? To gather more liquidity, right? And let's go over the chart. Let's give you guys a chart example. This is how the chart looks like on this as well, right? So you can see market first made a low, made a high. Eventually, market came back down, swooping out that low. Eventually made a stable low right over here. Market came back up, broke structure up right over here. This high was the one that swooped it out, right? So this is the breakout structure that we're looking for, right? So market eventually goes up. Now from here, it could have been an OTE. Market came back down, eventually making another going up higher, making a false breakout structure. People long over here, eventually will get juked right back to the downside. So market makes a stable high, stable low. This right over here is now your OTE. Your OTE starts from right over here. So from the 0.62% mark to 0.79% mark is your OTE startup, right? So everything here is very cheap to buy, and that is where your OTE will happen. So market comes back all the way down. In this case, it came down to the 0.70% mark. Eventually from here, start up the next leg up. You can see right when it tapped there, right when it tapped the OTE spot, market did a huge move to the upside, right? This could be potentially because of news. Well, news doesn't really mean nothing, right? All news does, it just brings more volume to the market. So, making it move faster. If Donald Trump or anybody in the market, NFP does not move the market, right? What moves the market is what all they do is bringing volume. So market has to go up, or market was gonna go up regardless anyway, right? Why? Weekly CRT to the upside, right? So that's why this made sense to go back up, right? And this was not random, right? Because people would think, the NFP is random, CPI is random. No, right? They're programmed right beforehand already. So market did as retracement deep down. Eventually, this caused a leg up to the upside. Let's see if we got any more example. Let's just see if we have a complete raw spot right over here. And before I give you guys any more example, let's talk about when should you expect it. The way you could expect it is right after the second manipulation candle, right? So once the manipulation candle happens, after onward, this candle could have an LTE. It looks like it had a huge retracement back down to the downside. It looks like it did not have OTE down here. It doesn't, because the market OTE would not go below this low, right? So a OTE, it was not here, but on this case, there was an OTE order over here, right? So a OTE happens after that manipulation candle. So after the manipulation candle, which is this candle right over here, because this candle did not tap the higher time frame key level, with this candle right over here. So this candle tapped the higher time frame key level. Eventually, this candle had an OTE, right? So after the manipulation candle is where the OTE happens, right? So let me see if we got any more examples here for you guys. Let me go back on the chart. A OTE. Somebody swoops out a high, then swoops out a low, break structures down to the downside. Let's see if we got an OTE here. Taking a stable low, stable high. Yup, OTE would be right over here. Let's go to the lower time frame to get that. This would be I think the daily time frame OTE, right? I'm pretty sure it should be, right? No, this would be a weekly time frame. So if you have a weekly CRT, you're gonna be going down to the 4-hour time frame to look for that OTE, right? So this would be market first. If we go to the 4-hour time frame, you souped out a high, just right over here, and eventually souped out a low, and eventually this low right over here was the last low that souped out the high, right? So eventually market broke pressure down. In this case, it did not make another stable low here, right? Market did not make another low. In this case, it did, right? So that it could be as that, it could be like that as well, right? So market goes down to the hourly time frame to give more of a clear example. The market, your OTE, as I said, starts from the 0.62% mark to higher, right? So in this case, 0.62% mark was the one that got tapped, and from your 0.62% mark to the 0.79% mark is your OTE, right? You could definitely go to the 0.886 mark, but these are the highest probability. So if you put your stop loss above the 0.79% mark or below the 0.79% mark in a bearish and bullish example, you'll be fine, right? But you'll be rare for the market to go above the 0.79% mark, right? You can see in this case, market retraced to the 0.62% mark. Yes, this is not a, like, how can you say this? This is not exact, but it's near, right? So basically, OTE happened still, regardless, right? So market OTE happened, market did a huge retracement. People think it's gonna go up higher. They basically, people who are right to the downside was second guess over here, but probably think, oh, it's gonna go up a lot higher from here. Market brushes up, market right over here could still go to far time frame. They think, oh, market brushes up to the upside, market go up higher from here. They get juked, right? So this right over here started up the second leg happening, right? In this case, you could see it did not, tap the 0.62% mark, but it was very near, right? So even in this case, you can see it did not tap the 0.79% mark. It was near it, right? You can see the 0.75% mark, 0.70% mark, right? Was near, right? So that's why it still mattered regardless, right? It still worked out, right? Because these are really high probability, right? In this case, this is still valid because it was near it, right? So it was near that 0.60% mark. You could feel it scroll down really hard, right? It was near, right? So that's still a OTE. So this is OTE where the market will do a huge retracement to the upside or downside, making the traders who are right second guess and make them second guess the trade idea, make them get out the trade early, and second guess their trade, either put their stop loss too high or too low. Eventually market swooping them out. So yeah, this is OTEs. Thank you for watching. Like, comment, subscribe, like, comment, subscribe, share, and I'll see you guys inside my Discord. Peace out. Thank you for watching. Peace out, chat.